Boredom in trading does not arrive loudly. It does not announce itself with pain or fear. It slips in quietly when nothing seems wrong, when your system still works. Your losses are acceptable. Your wins are ordinary. And yet, something inside you feels flat, muted, almost disconnected. And that is exactly why boredom is one of the most dangerous psychological states a trader can enter. Because it feels harmless, it feels neutral, it feels like stability. But underneath that calm surface, your mind is slowly drifting away from presence, away from discipline, away from respect for risk. Boredom is not the absence of opportunity. It is the absence of meaning. You are still clicking, still analyzing rules on paper, but emotionally you are no longer there. Trades no longer teach you anything. Charts no longer surprise you. You already think you know how this ends. And when the future feels predictable, the brain shuts down its alert system. This is not confidence. This is numbness. And numbness in trading is a silent erosion of edge, because trading at its core requires attention, and boredom kills attention before it kills accounts. Most traders misinterpret boredom as a sign they need more action, more markets, more time frames, more complexity. But the truth is harsher. Boredom is a signal that you have stopped respecting uncertainty, when you no longer feel tension before entry, when you no longer feel a pause before clicking buy or sell, when you no longer review trades with curiosity, but only with routine. Boredom has already taken root, and the market does not punish boredom immediately grow. It waits, because boredom makes you careless in subtle ways. You move stops a little, you enter slightly earlier, you hold a loser just a bit longer, not because you are emotional, but because you are disengaged, and disengagement is far more dangerous than fear. Fear makes you hesitate, boredom makes you sloppy, and sloppiness compounds invisibly. Boredom convinces you that you are above the process, that you have seen this pattern too many times for it to matter, that one small deviation will not change anything. And that is when trading shifts from execution to entertainment, from discipline to stimulation seeking. Many traders think boredom means they are ready to scale, ready to increase size, ready to speed up. But often it means the opposite. It means they have stopped doing the internal work, the quiet work, the boring work that actually keeps them profitable. Boredom is what happens when your external actions continue, but your internal awareness shuts off. And the most dangerous part is that boredom feels like maturity. After boredom settles in, it evolves into something more deceptive, a calm that feels earned, a calm that feels like progress, a calm that traders often mistake for mastery. But this calm is not clarity, it is sedation. It is the mind lowering its guard because it believes the environment is safe, predictable, already understood. And this is where real damage begins. Because trading does not punish excitement as harshly as it punishes indifference. Fear keeps you alert. Anxiety forces you to double check. But calm born from boredom removes friction, removes internal resistance, removes the pause that separates intention from action. And when that pause disappears, mistakes no longer feel like mistakes. They feel reasonable, even justified. This dangerous calm shows up in subtle ways. You stop preparing as deeply because you've seen this market before. You stop journaling with honesty because there is nothing new to write. You stop reviewing losses with humility because they feel routine, and routine dulls awareness. The trader is still present physically, but absent mentally, clicking buttons while the mind drifts elsewhere. And the market senses that absence, not emotionally, but statistically, because every small lapse in attention slightly shifts probabilities against you, and probabilities compound quietly. The most dangerous part is that nothing collapses immediately. Equity does not crash, drawdowns remain manageable, results look acceptable, and this reinforces the illusion that the calm is healthy. But this calm is fragile because it is built on disengagement, not on focus, and disengagement always leaks into execution. You start entering trades without fully visualizing risk, without fully accepting loss, because loss no longer feels real, it feels theoretical. Boredom has numbed your relationship with consequence, and when consequence becomes abstract, risk expands unconsciously. The trader does not suddenly become reckless, they become casual, and casual behavior in trading is a slow bleed, not a sharp wound. This calm also changes how you interpret the market. Uncertainty stops feeling like uncertainty, it starts feeling like noise. Randomness becomes back. When boredom deepens, the mind begins to manufacture meaning because the human brain cannot tolerate prolonged neutrality. It needs stimulation, contrast, something to react to. And when the market does not provide that stimulation naturally, the trader starts creating it internally. This is where fake opportunities are born, not from greed, not from desperation, but from the subtle psychological need to feel engaged again. Boredom convinces you that you're missing something, that if you just look closer, zoom in, add one more perspective, an opportunity will reveal itself. And so the trader starts scanning more aggressively, switching time frames, watching more instruments, reading more noise, not because edge has increased, but because attention is starving. And a starving mind sees patterns everywhere. Randomness begins to look structured. Consolidation begins to look like accumulation. Ordinary pullbacks begin to feel like early entries. And the trader rationalizes these perceptions with language that sounds professional. This is not impulse, this is anticipation. This is not overtrading, this is being proactive. Boredom is dangerous because it disguises stimulation seeking as skill refinement. The trader tells themselves they are becoming more advanced, more sensitive to nuance, but in reality, their criteria are loosening. And loosened criteria always increase trade frequency while decreasing quality. Fake opportunities feel convincing because they are internally generated. They align perfectly with the trader's emotional need to act. And when an action satisfies an internal need, it feels right, even if it is statistically wrong. This is why fake opportunities often look best just before execution, and worst only in hindsight. Boredom also shortens the trader's time horizon. Waiting begins to feel pointless. Patience begins to feel wasteful, and the trader confuses inactivity with stagnation, forgetting that in trading, not acting is often the highest quality decision. But boredom reframes waiting as weakness, as hesitation, as lack of confidence. And so the trader acts to reaffirm identity, to prove to themselves that they are still sharp, still involved, still a trader. But identity-driven trading is not performance. As boredom and fake opportunities accumulate, something deeper begins to fracture inside the trader. An identity crisis that rarely gets spoken about because it has no dramatic symptoms, no panic, no breakdown, just a quiet confusion about who you are in the market. You start questioning your own role without consciously asking the question, are you a disciplined executor or a flexible improviser? A patient operator or an active participant? A professional or simply someone who trades? And this uncertainty leaks into behavior because identity always drives action before logic does. When boredom removes emotional contrast, the trader loses the internal feedback that once reinforced who they were becoming. Wins no longer validate discipline, losses no longer warn against deviation, and without feedback, identity blurs. The trader still uses the language of structure, risk management, edge, but internally they feel disconnected from those concepts. They no longer feel owned. They feel borrowed, like rules inherited from a past version of themselves. And this is dangerous because when rules do not feel personally anchored, they become optional. The trader starts modifying their behavior not based on data, but based on mood, energy, or subtle discomfort. And because boredom feels neutral, these modifications feel harmless, even reasonable. The identity crisis deepens when the trader realizes they are no longer excited by improvement. Journaling feels mechanical. Reviewing trades feels repetitive. There is no sense of progression, just maintenance. And maintenance does not satisfy the ego. The ego wants growth. It can feel, not growth that happens invisibly over time. So the trader begins searching for a new identity inside trading. Maybe they are a scalper now. Maybe they should trade more markets. Maybe they should be more intuitive, more aggressive, more advanced. But these shifts are rarely strategic. They are existential, attempts to feel alive again, to escape the feeling of being stuck in a loop. And the market is unforgiving toward traders who trade to resolve internal conflict, because the market does not care who you want to be. It only responds to what you do consistently. This identity confusion also creates internal contradictions. The trader believes they are disciplined, yet their behavior increasingly reflects convenience. They believe they are patient, yet they feel restless when nothing sets up. They believe they respect risk, yet they no longer feel risk emotionally. And holding these contradictions quietly erodes self-trust. The trader begins to doubt themselves, not dramatically, but subtly. There is a truth about trading that rarely gets spoken honestly, not because it is complex, but because it is uncomfortable and difficult to sell. And that truth is this: if you are trading correctly, most of your time will feel boring, repetitive, and emotionally unrewarding. Not because you are failing, but because you are finally aligned with reality. Mentors avoid this truth because boredom does not inspire, it does not motivate, it does not attract followers, it does not create dramatic transformation stories. But trading mastery is not dramatic. It is quiet, flat, and almost anticlimactic. And the majority of traders do not show up for that reality. They come for excitement, for growth they can feel, for progress marked by emotion. And when trading removes those emotional markers, they assume something is wrong, but nothing is wrong. What is wrong is the expectation. Boredom is not a phase to escape. It is a condition to tolerate. And most traders are never taught how to tolerate it. They're taught how to manage fear, how to control greed, how to stay disciplined during volatility. But no one teaches them how to sit through long stretches where nothing tests them emotionally, where execution feels mechanical, where results feel muted, and the ego feels unnecessary. The truth no mentor says is that boredom is the final filter. It is the state that separates those who want to feel like traders from those who are willing to operate like professionals. Professionals in any field spend most of their time doing unremarkable work exceptionally well, and trading is no different. But this clashes with the romantic narrative of trading as freedom, excitement, self-expression, because real freedom in trading comes from consistency, and consistency feels dull to the ego. Boredom exposes whether you are trading for outcome or for identity, whether you are committed to process or to stimulation. And many traders quietly quit, not because they lose money, but because they cannot stand the psychological emptiness that comes with doing things right. They miss the emotional spikes, the sense of struggle, the feeling of being tested. And boredom feels like stagnation to a mind conditioned to equate intensity with progress. Mentors rarely say that boredom is the price of admission to longevity because it sounds discouraging, but it is honest. And honesty in trading is far more valuable than motivation. The uncomfortable truth is that if you are constantly entertained by the market, you are probably doing something wrong. At this stage, the path splits quietly, not with a dramatic decision, but with a subtle internal choice that most traders are not aware they are making. Whether boredom will be treated as an enemy to escape or as a condition to work within. And this choice determines whether a trader moves toward mastery or slowly drifts out of alignment. Mastery does not eliminate boredom, it redefines it. The master trader does not expect stimulation from the market. They expect clarity, repetition, and execution. And because their expectations are realistic, boredom does not provoke reaction. It becomes background noise rather than a trigger. The difference between boredom that destroys and boredom that refines lies in attention. The losing trader responds to boredom by loosening standards, by adding activity, by seeking novelty, while the mastering trader responds by tightening focus, by reducing noise, by refining execution within the same narrow boundaries. Mastery is not about doing more. It is about doing less with greater precision. And precision is inherently boring because it leaves no room for improvisation. Boredom reveals whether a trader is attached to expression or to effectiveness. The expressive trader wants to feel involved, creative, adaptive in real time, but markets reward consistency, not expression. And the trader who accepts this shifts their relationship with boredom from resistance to acceptance. Boredom becomes a signal that conditions are stable, that nothing requires interference, that patience is being tested, not skill. The mastering trader understands that the hardest skill in trading is not entry or exit, but restraint. And restraint feels boring because it is invisible. There is no emotional feedback for not making a mistake. No dopamine for staying out of a low-quality trade, and yet those invisible decisions are what build equity over time. Boredom also exposes time preference. Traders who cannot tolerate boredom tend to have a short time horizon. They want results now, feedback now, progress they can feel. Mastery requires extending that horizon until individual trades no longer matter emotionally, and extending time dulls emotion, which feels like boredom to an untrained mind. But to a trained mind, it feels like stability. The mastering trader does not confuse boredom with stagnation. They understand that stagnation is lack of improvement, not lack of excitement. And improvement at advanced levels happens slowly, subtly, almost imperceptibly, in reduced variance, cleaner execution, fewer mistakes, not in emotional breakthroughs. Boredom also forces the trader to build a life outside the market, because trading alone cannot provide constant engagement without becoming destructive. And traders who seek fulfillment exclusively through trading will always struggle with boredom because they are asking the market to meet emotional needs it was never designed to meet. Mastery requires emotional independence from outcomes, and emotional independence feels empty at first, like losing something important, but what is actually lost is dependence, not meaning. The mastering trader finds meaning in a life. If you have followed this far, there is an uncomfortable realization forming beneath the words that boredom in trading is not a temporary obstacle, not a flaw in the market, not a sign that something is missing, but a mirror. And what that mirror reflects depends entirely on how honest you are willing to be with yourself. Boredom exposes whether you are here to be entertained or to be effective, whether you want trading to give you feeling or to demand discipline. And this is not a question you answer once. It's a question you answer every day through your behavior, because the market never asks what you intend. It only responds to what you repeatedly do. Boredom is the moment when trading stops pushing back, when nothing feels urgent, when nothing feels dramatic, when the market gives you space. And space is dangerous for an undisciplined mind, because in space, there is nowhere to hide. No volatility to blame, no chaos to react to, only your habits, your attention, and your ability to stay present when nothing stimulates you. And this is where most traders quietly fail, not by making a catastrophic mistake, but by slowly disengaging, slowly lowering standards, slowly trading for reasons they do not fully acknowledge, until one day they realize they no longer trust themselves, not because they lack knowledge, but because they lack alignment. And alignment cannot be forced. It must be chosen repeatedly. Boredom asks you a final question, one that no indicator, no mentor, no strategy can answer for you. Can you remain precise when nothing feels exciting? Can you respect risk when nothing feels threatening? Can you wait when there is nothing to wait for except the right moment? Because if you cannot, the market will eventually give you excitement, but it will come in the form of loss, stress, and regret. And if you can, the market will give you something far less dramatic, but far more valuable: longevity, consistency, and quiet control over your decisions. This is not a conclusion, because trading never really concludes. It only cycles through states of attention and neglect, discipline and drift, presence and boredom. And the question is not whether boredom will return, it always will. The question is what you will do when it does, whether you will try to escape it again, or whether you will recognize it as the threshold to the next level of your development. Because boredom is not the end of the journey. It is the point where the journey stops feeling like a story and starts feeling like responsibility. And in the next video, the real question will not be how to trade better, but how to live with this responsibility without needing the market to entertain you anymore. Appreciate your time here. These moments are for observing yourself, not the market. A like or subscribe is welcome if you feel it, but don't rush. Keep this awareness with you and let it guide your mind, your emotions, and your decisions.